Hey guys, this is Rudy coming at you live from Palm Beach in Florida again for the second time on this Sunday, which is March the 5th. I've often said many of the people on this channel are the smartest guys probably in the entire YouTube community, and we're a small group, but man, do we find good stuff, right? So every now and then you guys share something with me, which makes me do a double take and then a triple take, and sometimes even more. So just a day ago or so, Russell Gregory said, "What do you think of Alliance Resource Partners?" And I was thinking like, whoa, there's a name that I've heard before, but never really looked at it. Shame on me, right? So Russell says 13.22% dividend yield. Like, really? Are you kidding me? So I replied, I said, at a glance, ARLP. ARLP looks like a buy. I'll need to take a closer look. Thank you. And Russell said, I'd like to see a video on this one. Well, here it is, Russell. A very nice dividend to pair with IEP, which is ICANN Enterprise Partners. So in the first place, you must note that Alliance Resource Partners is a limited partnership, which means you become a partner of the company, and they are going to, if you are a U.S. national or taxpayer or tax person, they're going to issue you a K-1, which is going to complicate your tax return for you slightly. For those U.S. tax persons who are watching this video, in reality, a K-1 is not significantly different to a W-2 or a 1099 or whatever. Basically, they give you a sheet of paper with a whole lot of amounts in little boxes, and on tax filing software, you or your accountant will simply match up the numbers in the boxes with whatever the questions are in the tax filing software. So let's do a little deeper dive here on Alliance Resource Partners. I already have it sort of penciled in on my notebook as a potential buy. So in other words, this is something I would potentially look to add to my energy portfolio. In fact, I am even approaching it from the point of view of saying, why was this not in my energy portfolio in the first place? But let's take a closer look and I'll tell you why. So this is their website, Alliance Resource Partners Limited Partnership. You can take a look at the company and read all about it if you have time to do so, which will probably be time well spent, as opposed to watching me for 10 or 15 minutes just give you a snapshot overview, because you should always do your own due diligence. So what exactly is Alliance Resource Partners? Well, as the coal industry's first publicly traded master limited partnership. So Mayday for all the people who are interested in climate change and saving the environment, and not putting your groceries into plastic packets because they're made with petroleum products, while all the things that go into the plastic packets, like your milk jugs and your containers that you buy all your groceries in, are all made of plastic. That's okay, as long as you don't put all of them into a plastic bag. Everything is good. Okay, I'm just kidding. So anyway, coal, oh, what a dirty word. I mean, literally and figuratively, right? Coal is just filthy. Coal actually powers much of the world, believe it or not only in Asia, but also in Africa. Coal is a primary source of energy. And to be fair, regardless of where you stand in terms of the greenwashing philosophies that you subscribe to, energy, as we know it, fossil fuels specifically over the past 100 years, have lifted more people out of poverty than any other single entity on the planet. Doesn't matter what else you look at, your politics, your religion, whatever the case might be, nothing has succeeded in lifting people out of poverty as fossil fuels have done. So am I anti-coal? You got to be kidding. I love coal. Coal is great. Alliance Resource Partners says we are currently the second largest coal producer in the eastern United States. Let's take a look at this here. So I made all these arrows in red because if you're concerned about coal, I shouldn't make them in green, because otherwise it looks as if I'm kind of biased, you know, like red is angry, green is happy. So I'll just make them in red. So if you're angry about coal, then you can stay angry while you follow my red arrows on the screen. You can buy Alliance Resource Partners for about 20 bucks, sitting sort of in the middle of its 52-week range. It's a $3 billion company, so it's a small cap value, and its earnings per share is positive 439. It's got a price earnings ratio of less than 5. Are you kidding me? This thing is super cheap. What about this annual dividend yield year? This is a $20 stock that's currently paying almost $3 a year in dividends, which is 13%. Look at this black line over here. This is how Alliance Resource Partners has outperformed the indices over the past 1 year. The light blue line is the Dow, the purplish line is the S&P 500, and the orangey line is the NASDAQ. Man, this company has done really, really well, and I'm almost sorry that I didn't have it in my portfolio a year ago. It is almost that good, so thank you, Russell. This is a quick snapshot here from TipRanks. Almost everything is positive. However, my caveat here is that sites like TipRanks are basically just repositories where you can find the opinions of people. You can definitely ignore blogger opinions or vlogger opinions like mine, right? Do your own due diligence and ignore people like me who say, buy, otherwise I sound like Jim Cramer. Or even if I say, I'm selling Petrobras, you guys can shoot me down in flames, but every now and then I rebalance and I also need a bit of cash from time to time. However, some of the more valuable information as it relates to their fundamentals, the technicals and the fundamentals are positive as well, and overwhelmingly so. There's no particular negative. In fact, there's hardly a negative that I can pick up on other than for the fact that it's filthy, dirty coal, right? The other thing you can sort of ignore is you have a $20 stock, which has an analyst price target of around 28, 30 bucks. However, it's only based on the opinion of 2 of the sell side analysts who have an opinion and offered an estimate on the 12-month price for Alliance Resource Partners. So with only 2 analysts, and these are not really noted analysts, with no disrespect to them. These are not analysts from, for instance, Morningstar or something like that, or CFRA. They're from smaller houses. And hey, you know what? I think that's understandable because most people are trying to focus on ESG, which is environmental, social, and governance, and clean energy. And so coal is ugly and dirty, you know. So the analysts, especially the analysts working for large investment houses like Goldman Sachs, Morgan Stanley, probably want to stay away. It's not good for them from an optics point of view. How about the financial strength, right? So always look at debt. Usually I mention it last. In this case, I'm mentioning it first. This is exceptionally good. Alliance Resource Partners has a debt to capital ratio of only 20%. It says it's in line. It's not in line. It's well below. And then, so if you look at the little snapshot here at the bottom, so here's this total debt to capital ratio. The gray blob here is Alliance Resource Partners, and the little line is the industry average is 20% compared to the industry's almost 34%. So it's not in line. I mean, it's close, but there's a huge delta between those 2 numbers. Little change in debt. They paid down some debt. Look at this quick ratio here, right? So quick ratio, how much cash you got in the bank compared to the bills you got to pay in the next 30 days or so. Alliance Resource Partners, no problem at all, 2.26 times. The industry is only just bordering on 1. By the way, 1 is okay. Less than 1 is not. Anything greater than 1 is fine. And Alliance Resource Partners is at 2.26. But how about right at the bottom? Hey, the interest coverage ratio for the most recent quarter, 32.45 compared to the industry's 10, with an interest coverage ratio of 32.45 and a quick ratio of 2.26, both of which are in the industry's strongest quintile. The company should easily be able to repay its debt, which, by the way, isn't even very high. How about profitability? ARLP is one of the most profitable companies in the oil, gas, and consumable fuels industry, especially now. Regardless of what people are telling you about renewable energy, demand for coal is off the charts. There are countries, just a couple of weeks ago now, I was in South Africa. South Africa is going through regular daily power cuts. Every single day, the power is out for 2 to 4 hours, sometimes even longer, every single day. Many South African homes, those who can afford it, are now installing inverters, which are basically rechargeable battery packs, so that when the Eskom, which is the local supply company's power, is on, they can charge their batteries. And when the power goes down, they effectively run off their batteries, which are called inverters, in their house, and it powers the house for a few hours until the power hopefully comes back on again. Now, one of the byproducts of that is almost the political consequence of telling the South African government, this is international governments telling the South African government that they have to wean themselves off fossil fuels. South Africa has been relatively dependent on energy imports for a long, long time, but they have a lot of coal. Going back into the 50s, South Africa actually created a company called Sasol. SASOL is an abbreviation, SA for South Africa, and SOL is in other words, SA, South Africa, SOL. The SOL is steenkool and olie, which is basically coal and oil. South Africa was producing petrol or gasoline for cars from coal going back to the 50s through a system that was engineered by a German pharmacologist. And from that point of view, relatively energy independent because they have so much coal. But international governments are telling them to stop burning coal. And as a result, now they have power outages every single day. It's not fair. Fossil fuels has lifted people out of poverty. And what we're doing now is we're forcing them to go green, right? To meet the requirements of the COP groups and things like that. And you're actually almost pushing people back into poverty again, because no power, no money, no business, right? I mean, business shuts down. If there's no power, you can't go to the ATM, you can't go to the gas station, fill up your car. You know, like there's just, like everything pretty much just shuts down. It's not good. Gross profit, ARLP. Okay, I'll get off my political statement horse and get back onto my presentation here. 95% gross profit margin for the trailing 12 months compared to the industry's only 34. 34 is good. 95 is outstanding. Operating profit margin 27 compared to the industry's 20, so outperforming the industry by nearly 50%. Look at the net profit margin, 24%. The industry is only managing to maintain about 3% as a net profit margin. How's this dividend? Right, so it pays an annual dividend of $2.80, which at the current stock price yields 13.22. Now, 13% is a genuinely good dividend, right? So what we always want to do is make sure that it is sustainable. And in the case of Alliance Resource Partners, it certainly looks to be very sustainable. Its annual dividend of 13 easily beats the industry's average of 4. And the energy industry as a whole is quite rich with dividend-paying stocks anyway, including the two stocks I just covered on the previous video, like Petrobras, which has a ridiculous dividend, and Chevron, which pays about 6. The dividend changed. It's also gone up in the past few months or so. So pretty good. So far, so good, huh? If you find anything wrong in my snapshot analysis here on Alliance Resource Partners, as you do your own due diligence, please tell us and point out any errors or omissions I've made in covering this particular stock. Earnings growth at Alliance Resource Partners outpaced revenue growth over the trailing 12 months. We look at it down here in the middle of the screen. Earning per share growth trailing 12 months, sort of in line with the industry. The industry at 256, ARLP 221. Right at the bottom, revenue growth. Well, that's the 4,000% I mentioned in the previous video as well, right? Don't be confused by that number. It's because there are lots of micro-cap little energy companies in the energy sector who have just blown everything off the charts in terms of their performance over the past couple of years or so. If you think of it very simply in numerical terms, if you're doing $1,000 in sales, then when you get to $2,000, you've had 100% increase, as an example. But getting from $1,000, let's say you start a new company and in the first month you do $1,000, and then in the next month you actually don't do $2,000, which is 100%, you actually do $10,000, which is a massive leap, right? And then in your third year of business, you go from $10,000 to like $40,000, $50,000. The growth is off the charts. And that's why you see that really ridiculously high number down here at the bottom. So ignore the industry just for a second and look at ARLP in isolation. Revenue growth over the trailing 12 months, or over the last year, 53% revenue growth. Good job, ARLP. Is it effective? You betcha. So it's doing a good job. So return on equity, assets, and investment here. This is also trailing 12 months, sort of in line with the industry, 40 versus 41. Outperforming the industry on assets performance, return on assets 24 to 16, and sort of in line with the industry on return on investment 26, 23. It's about the same, right? Revenue per employee ain't half bad at $713,000 revenue generated per employee digging coal out of the ground. Let's look at the fundamentals here. This is the balance sheet. So it's just a quick snapshot, right? The balance sheet is the sum total of cash and short-term equivalents, or let's call it assets, equals your debt plus your equity, right? So if you take your cash and your short-term investments, look at the uptick over the past few years into 2022. 2023 is projected to look very similar to 2022, if not greater once again. The debt has been declining. They've been paying off some debt. And as a result, the equity has been increasing. The equity would be you and I. If we had a position in Alliance Resource Partners, we are the people who own the equity, and that is going up as the debt is being paid down and as the assets are increasing. How about the income statement just below it here? So the highlight here is that was the balance sheet, and this here at the bottom is the income statement. Total revenue, you can see the uptick here from 2021 to 2022, and obviously 2020 was a bad year for almost anybody, anywhere, any place doing any kind of business. The operating income, same thing, you can see it there in the middle for 2020 was a bit of a disaster, but a quick recovery and a very, very good position to be in now in terms of total operating income. And what about total net income? Same thing here, 2020, everything crashed. 2021, a little recovery. 2022, doing great, significantly greater than pre-pandemic, right? So whatever your thoughts are about coal, whatever your thoughts are about renewables, and whatever your thoughts are about clean energy and the pandemic, those are all things that are probably best left unsaid, or for the larger part, maybe things we can ignore on a go-forward basis, so we can just be happy and look ahead and see what we can do. The fact of the matter is, as I go through this particular presentation on Alliance Resource Partners, I cannot really find like a negative or sort of a reason for me to take pause and say, is this really what I want? Here's a little cartoon that I stole from someone, but kegelcartoons.com is the originator of this, with Santa Claus saying, do you actually want a lump of coal? And the little kid says, sure, so my dad can burn it. Have you seen the price of energy lately? Now, that's a wrap on Alliance Resource Partners. I have penciled it in as a buy. When I do this, I will probably open a position for myself in Alliance Resource Partners. In fact, I am planning to do just that. Basically, I will start by seeing what happens to Alliance Resource Partners this coming week. So starting March the 6th. And I will also open smaller positions for all the clients whose cash I manage and equities that I manage on their behalf. So for me, it's a buy. If you have a counter opinion, I'd be most grateful if you highlight any negatives that you can pick up. As it relates to Alliance Resource Partners, the investment, not, or to a lesser degree, about coal and clean energy and renewables and hey, why don't you, Rudy, why don't you buy some windmills and solar panels instead of buying coal? I'm not talking about that. If you can knock holes in my investment thesis, or tell me why there's any particular reason from an investment thesis point of view why I should not invest in Alliance Resource Partners, I would welcome that opinion, and we can have a debate about that. So until next time, this is Rudy signing off, saying thanks for watching. Take care. Bye-bye.